Hey everybody, this is Boris Schlossberg from BKTraderFx. I'm going to show you a very cool setup that you can use on a short-term time basis to trade anytime during the day or night and try to make small but very efficient and hopefully high probability pips out of the market. It's called Stop Hunting with the Big Players, and it rests on a very simple assumption. Basically that when prices get very close to round numbers, they're naturally going to want to go there. And the reason why is probably the same reason that everybody celebrates their 10th wedding anniversary and 20th wedding anniversary and 50th wedding anniversary instead of their 37th wedding anniversary or 23rd wedding anniversary. Human beings are naturally drawn to round numbers. Therefore, in the Forex market, just like every other place in the world, people are going to leave their stops near the round numbers. And as price gets closer to those round numbers, many of the big players are going to try and gun the price action towards that level to see if they can run those stops. So I'm going to show you in the dollar-yen over the last couple of days how this setup works one way or the other way. And by the way, for those of you from North America, you can think of the 100 points between 0 and 100 as kind of like a football field. And the 20 to 000 zone is the red zone on one end, 80 and the 00 zone is the red zone on the other end. For those of you from Europe and the Middle East and all the rest of the world, think of this as the soccer field. And this is the goalie area on one side of the field, and this is the goalie area on the other side of the field. And all we're going to try and do is score quick, fast, and easy, and try to make money either up or down following price action. So let me show you a couple of very interesting setups that happened in dollar-yen over the last 2 days, because when you have this setup works great when you have lots and lots of volatility and lots of back and forth action that goes through many price levels. Let me zoom in a little bit. This is a 10-minute chart. I'm going to get very granular because you want to look at this on a much more granular basis. And first I'm going to show you, let me just get rid of this. I'm going to show you what happened Sunday night and how you would have traded this. Just bear with me as I try to sharpen this up. Okay, so the setup is very simple. Here, this would have happened in a blink of an eye. The whole idea being is that as prices start falling, you want to put a stop sell, that is an order to sell at 14.20. Typically, you're going to be a little bit ahead of it. You're going to, price is going to be 14.25, maybe even 14.50. Once they start falling through the 50 zone, you want to put an order at 20, so that should they fall through 20, you're in the market automatically. Once you're in the market, all you're looking to do is target the 20 points to the 1400. You're going to put a buy order in over here to cover yourself up at the 1400. And your stop will be 20 points higher. So let me just show you what that would be. Your stop would be at 1440. It's a 1-to-1 risk-reward ratio, mainly because it's a high probability setup. So this happened Sunday night when we had a lot of risk aversion, lots of liquidation on the eve, or actually right afterwards of the G7 meeting. But let's take a look at what happened today, because this is a setup that I traded today with good success. Let's move over to today, and let me show you what happened in the early U.S. session. Basically, last night we had great earnings from Apple. The rest of the world kind of caught a bit on the equity markets. The moment equity markets get strong, risk aversion goes into the garbage, and risk assumption takes center stage. So people get very risk appetite friendly, and they start buying up the carry trade. So they started buying dollar-yen. And dollar-yen, as you can see, was starting to get very strong throughout the night. Nice, good momentum. So what we did here is, again, I'm going to just zero in on the trade. The moment the price went through the 1480, we got long on the price. We put our stop at 1460. Here it is. Here's 1460. As you can see, we were never in danger of the stop being hit. However, we had a little bit of a retrace. This is a 10-minute candle. So we got long here, 10 minutes, another 10 minutes, in half an hour, boom, 1500, we got done, we walked away, banked money. So that's basically the setup. The whole idea is you trade momentum, you get behind a good story, and you hope that they run for the round number in order to make you some quick money. That's the stop hunting with a big player setup. That's the one we're going to be doing in our chat room for the next couple of days to let you practice it.